Hello and welcome to the digital HELOC opportunity with MyEQNow, part of Wholesale Mortgage Direct. My name is Dennis Kelly. I'm the Chief Lending Officer. We also have Amanda Green on here, our Production Manager, as well as many of our solutions team. So thanks all for attending today. We value your time, so we start on time and we're going to go very quickly. If you do have questions, please go ahead and put that either in the Q&A or in the chat section. All right, unlock the digital HELOC opportunity. As many of you know, homeowners are sitting on $35 trillion in equity. That's a 125% increase since 2019. This creates an unprecedented opportunity to tap into their home's value. Additionally, 60% of the borrowers in the United States have first mortgage rates under 4%. They don't want to touch a 2.5% rate, but they've got $300,000 in equity. Well, how can we help tap that equity? And how can you monetize that as a loan originator? Why would you use digital HELOCs? Well, you give flexibility. Borrowers get a revolving line of credit, draw as needed, while keeping that low first interest rate mortgage. Unlike a cash out refi, if you refinance at 7%, that 2.5, the whole 2.5 goes up to 7. And not only that, you have much higher fees when you're doing a first refi. Speed and convenience. With MyEQNow, this process is online and fast. Borrowers can apply in as little as 4 minutes and get funded in as few as 4 days. And with our remote notaries, many times they never even need to leave their own home. Very cost effective, lower interest rates than credit cards or personal loans, and the interest may be tax deductible. Control. You only pay on the line amount that's being used, the interest, and the fees are typically lower. And the blended rate, a blended rate is when you blend that 2.5% first rate with our 8.5 or 9% HELOC, that's going to create a lower blended rate than a cash out refinance first. All right, how does this benefit you, the originator? New revenue stream, capture loans from a massive home equity market instead of referring clients elsewhere, such as the depository banking institution down the street. Increases your loan volume and commissions. Client retention. If you're not offering a digital HELOC, your competition or the banks are. So you keep your clients with you. So if they want to purchase another home 2 years from now, they're going to come back to you for that next loan as well. Competitive edge. By partnering with us, MyEQNow, you can market yourself as a tech savvy and responsive to current market trends, tapping home equity when refis are down. It all starts with your professional white labeled website, point of sale. Amanda's going to get into that in a few minutes here. Also, MyEQNow's digital platform handles end-to-end processing. There's very little processing on the originator side. This is not a traditional wholesale model where we ask you to order appraisals and title. We do most all of that for you. So you can offer digital HELOCs without that heavy lifting. The quick approval, often in minutes, and funding in days means happy borrowers and faster payouts. All right, I'm going to turn this over to Amanda.
This is what your borrower's experience applying for the digital HELOC will look like. You're each going to receive your own unique website URL link. It'll have your name in it, and it's going to have your broker's logo, colors, and contact information. So you're going to send that link out to your borrowers. When they get there, they're going to click this Get Started Now button. The first thing we're going to do is collect their first and last name. If there's multiple loan officers in your brokerage, there will be a list of them here. If it's just your link that you send out, it's going to go straight to your information as a loan officer. So on the next page, we're going to collect the borrower's email address and phone number. We want to get this up front in case they close out of the application at any point. You're going to receive an email notification that somebody started an application with your link so that you can contact them and get them to finish that application. And then you'll notice here at the top as well will be your picture, name, ID, email, and phone number. So your borrower is going to click next, and we're going to ask them to give us a property value estimate and then their mortgage balance estimate to do some calculations for pre-approval. Then they're going to answer if they've had any outstanding foreclosures, bankruptcies, or modifications in the last 4 years. If they're self-employed, the great thing about this program, if your borrowers are self-employed, we're going to send them a link to log into their bank account and digitally verify their bank statements. They don't have to email you PDFs. They don't have to upload their PDFs. We're going to send them out that digital link. So they're going to enter their annual income here. They're going to estimate their credit score. And then let us know if this property is primary, secondary, or rental property, and the property address. We are going to use this property address to validate that you're licensed in that state. And then we're going to ask them how many units the property has. Next, if they pass all those pre-qualifying questions, we're going to ask them for their social security number, if they have a co-borrower, and we're going to have them click to consent to a soft credit inquiry. We're doing a soft pull-through experience for this to check their credit score and also to give them some instantaneous feedback. So on the next screen, we're pulling in any mortgages that we see with their credit report, and we're going to ask them which one belongs to this property. Next, we're pulling an AVM in the background to do some calculations, and we're going to be able to pre-qualify your borrowers just that quickly. This is a live science. Within a few seconds, they're going to see, okay, you pre-qualify for a maximum line of $500K. If the state has variable and fixed rates, they're going to see both options, and they're going to be asked to select a line amount up to $500K. That is our maximum loan amount. You will see that we do have a minimum amount of $50,000, so it's going to tell them that as well. And then next, they're going to be asked how much of that do you want to draw initially. We do have a 75% requirement for initial draw, and they're going to be able to see their payment rate and fees based on how much they want to draw. They're going to click to agree that they understand their total credit line, their initial draw, and their balance that leaves them to pull later. Next, just some basic application questions. So we're going to need their date of birth, their citizenship status, loan reason, marital status, how long they've lived at the property. We're also going to ask them how long they've lived at the property, if it's in a trust, if they have any additional properties. Then we're going to do an instant income verification. So they're going to sign to let us see if we can verify their employment information instantaneously. They can also select if they haven't been employed or self-employed for the last 24 months. They can add in additional income sources. We see a lot of investment properties with this. So they can add their rental income for their properties, or if they get alimony and annuity, they can tell us how they receive income if they aren't employed. Then we have a debts consolidation page, another thing that's going to take a lot of this back and forth work off of your plate and put it in the digital experience. So they're going to see all of their debts, and they're going to be able to select which ones they want to pay off with this loan. Then some quick demographics questions, some declaration questions, and this is mobile friendly. So your borrowers can be, scrolling through on their phone and apply for this home equity loan 24/7. And again, like we mentioned, you're going to receive an email notification anytime someone starts an application with your link. Next, we're going to do an instant identity verification through Plaid. If they do choose to skip any of these questions, they're going to be asked to upload those documents. So if they skip the instant, we're going to ask them to upload a copy of their driver's license. And then next, we're going to ask them to connect their bank account via Plaid to tell us where they want to have these funds dispersed to. And that's the end of the process. So they're going to receive an email with a link to their portal. So your borrowers are going to have a portal where they're going to be able to see updates on their loan, see what documents they need to upload those documents. And again, you're not having to email back and forth PDFs. Your borrower can upload those documents straight from their phone, from their laptop, their desktop. They're going to receive email reminders every day if they have any outstanding requirements. And then they're also going to receive an email if we ask for any additional documents. You're going to be copied on all of those emails so you know what's happening throughout the life cycle of this loan. So that's your borrower experience. You also are going to have your own portal to keep track of your loans and what's going on. So when you log into your portal, this is your home screen. You will be able to see all of the applications that have come in with your link and the status of that. So they're uploading initial conditions. It went into manual review. If it did go into manual review, it's going to tell you the reason. So this one's a property in New York. New York applicants cannot complete digital applications. If they're self-employed, this one has a high reported CLTV. So it just means that we have a human actually looking at these loans. But that's another great thing about this program. This is not just a digital review where if they don't meet certain perfect requirements, they're just kicked out. We're going to have a human review these loans and do everything that we can to get these approved and funded for you. So again, you're going to be able to see all of those loans in a pipeline. You can view that loan to get more information. So you're going to be able to see the entire application, how they answered those questions, what debts they selected to be paid off. You know, on that one, there's a high, high debt to income. So maybe you can look and see, okay, can we pay off some of these loans to get that debt to income down? Have that conversation with your borrower. You're also going to be able to see any documents that were initially pulled. So we have that credit report. You're going to be able to see that. Any consents that they agreed to. And then any documents that they've uploaded. So here they uploaded their homeowner's insurance. They uploaded their mortgage statement. You're going to be able to see all of that. You're going to be able to see conditions. So any conditions that we have, and you're going to be able to see what's been uploaded. If you happen to have a copy of it, you can actually come in here and upload these documents on behalf of your borrower as well. So it's a great borrower experience, great insight and tracking for you, and then also email communication throughout the life of the loan so that you and your borrower know exactly what's happening at any given time.
Wow, Amanda, thank you very much. That's a very robust system. As everybody, just to recap a couple things there. The first thing here, co-branded collateral. Everything can be branded with your logo and your information, as you saw there, with your color schematic. We were using the color schematic here of the light green. If your color schematic and your logo is dark red, we'll change it all over for you. Doesn't matter the size of your shop. If it's a one-person shop or 3,000 loan originators, we're happy to create these white label pages for you. We do have marketing best practices. MyEQ now will share strategies like how to mine your current database. You've all done loans for borrowers that have low interest rates and want to tap their equity. We'll help you out. We've got messages that will give the copy to you how to approach those borrowers so you can quickly generate leads. That's through that Guaranteed Success Marketing Kit. It's a comprehensive toolkit with ready-to-use content. For example, weekly email templates, social media posts, flyers, and guides to educate your borrowers about digital HELOCs, training and support, ongoing training for you and your fellow loan officers, webinar, one-on-one support, and a solutions team. That these gentlemen are on the phone with us right now, available 365 days a year. Yes, that includes Christmas. For any questions or scenarios that come up, this is very important to us. All loans are kind of like snowflakes, right? They're each a little bit different. We understand that. And as Amanda alluded to, when you're doing a purely digital process, if anything falls off the conveyor belt, that's a denial. With us, it's like, okay, let's look at this. Let's clean it up, shine it up and put it back on that conveyor belt so we can quickly get back on the track of funding that loan. All right. Why MyEQNow? What's the difference with us and some of those other players out there? Well, compensation. That's the name of the game. Make the cash register ring, right? We compensate up to 250 basis points, whereas our competition generally compensates 100 to 200 basis points. We have the white labeled site, which oftentimes with our competition, if you're a smaller shop, they make you go through a larger kind of aggregator. We don't require that. Early payoff, EPOs, we don't have it. Now, let me tell you something about that. In the spirit of a true kind of partnership, these loans are not meant to be paid off within a year. This is not a HELOC like at your local bank. If that's what they want, unfortunately, that's where they should go. If they want this loan, they're going to keep it for a little bit. Maybe they're going to put an addition on, pay it back a year from now, 2 years, 3 years, 5 years, whatever. That's fine. It's not meant to be a bridge loan. Broker size, as I mentioned, no broker too small. Very, very, very important is human in the loop. This is what gets that funding ratio. Active funding ratio for us is greater than 60%. and with others, it's lower than 20%. I should call out something that's very neat that we offer that nobody else in the industry offers. With a strategic partnership with Greenline, we can do bank statement loans without bank statements. Yep, you heard that here first. Bank statement loans don't require bank statements. What we do is through Greenline, we're going to extrapolate that data from that financial account, sort of like a plaid, and put that all into our bank statement calculator like that within seconds. So no more emailing back and forth 12 or 24 months PDFs. It's a pain, it's inefficient, and it's a bad process. As Amanda mentioned, we have both fixed rate and ARM products where available. And with us, minimal headaches. With our competition, maximum headaches. All right. Well, I want to thank all of you. See if you have any questions. Maria, if you will, go ahead and open it up. If people want to chat outside of the chat itself and verbally want to ask questions, that's fine. I do want to just call out a few more things as a reminder. We're available 365 days a year. Our broker approval is the easiest in the industry. It takes less than 2 minutes to complete at wmd.mortgage. We don't ask for your financials. We don't pull your credit report. You can fill it all online and sign it within a matter of minutes. So if you do want additional support, we can do another training for you and for your team. We do have a guaranteed success kit. And as I mentioned, we could create for you professional white label digital HELOC sites. With that, are there any questions? Let me look to see if there's anything in the chat. And or Maria, have you opened it up for people to verbally ask questions?
Hey, Dennis. So yeah, there's some great questions in the chat. The solutions team is trying to get to them quickly, but there's a few for you here.
Do you want to call them out, please?
Yeah, is there an interest-only repayment term? And if so, how long is that for?
Yeah, generally speaking, the interest only, great question. The interest only is sort of up to you and to your borrower. It generally ranges anywhere from 3 to 10 years. And that's something in the process we'll ask and verify. One of the things we want to make certain of too, and it brings up another good point, we want your borrower to understand what type of loan they're getting into. The last thing we want is that they get to closing table. There is no closing table. The closing table is their kitchen table. But they get to their kitchen table to sign loan documents and they go, oh, I didn't know about that interest rate. I didn't know about the interest only period. I didn't know the fees. We're very transparent. It's a great product. We have nothing to hide. From the very beginning, we want them to understand what type of product they're getting into. If they do have questions, even though the solutions team is here to help, we refer them back to you. You are still the originator that has that relationship with your borrowers.
Thank you, Dennis. The next question comes from Samuel. What are the lender fees?
I'm sorry, the lender fees, generally speaking, it's going to be 2.99% for a full doc loan, which is in line with our competition. And then for a bank statement loan, the bank statement-less bank statement loan, we do charge 3.49% for that.
Great, thank you, Dennis. Another question here. If the borrowers receive W-2s, how many year W-2 income is required?
Another great question. This is the beauty of working with MyEQNow. We have different programs. We have more programs than any other HELOC lender out there because we can take one type of program where it's 1 year W-2s. We have another program where it's 2 years. Maybe the 2 year W-2s might be a slightly better interest rate, but we still potentially could qualify them on a 1 year W-2.
Great, thank you. A lot of great questions coming in. So question from Brian Maddox, can you do third position?
No, we don't do third position. We're comfortable enough with our risk at second position.
Great, thank you. Scrolling through here, what is your max CLTV?
Generally speaking, we're going to be max 90% CLTV. What I want to be careful of, we want to do good, solid credit loans. We don't want to be a lender that comes in like no foreclosure bailouts or anything like that. You know, borrower that they're accessing some of their equity. As I said, maybe they're paying off some bills, putting on an addition. That's fine. It's not somebody that doesn't have a job or something like that. That they have to have the ability to repay.
Great. And follow-up question to that, what is the max LTV on a second position?
Well, that is the max. This is 90%. We call it HCLTV because what you're going to look at is the total amount of the HELOC itself. Even if they're not drawing it, we're going to look at the total amount that they can draw. That's why we don't call it CLTV. We call it HCLTV. It's the same concept. But let's say a borrower takes an initial disbursement of $250,000, but the total line amount is $300,000. For qualifying purposes, we're going to use that $300,000 for the HCLTV calculation. Great question.
Yes, thank you. If they are already approved with us for reverse mortgages, do they have to reapply to offer this?
You shouldn't have to reapply. If you can call us right there, it's that 786 number, or email us. We'll get right back to you on that just to triple check. At the very worst, it's a 2-minute application process online. So if there is any sort of reapplication, it's very simple to do. I should point out, when you do the application, the broker application, you get to choose your compensation level. So if you're going to make 250 basis points, that means we're charging 2.99. Let's say you opted on a full doc loan to make 200 basis points. We're going to lower our fees for your borrowers 50 basis points too. That's up to you what you'd like to make. So if you go down to 2%, we're going to charge 2.49. So that can give you a competitive advantage versus some of the other digital HELOC offerings out there too.
Great, thank you. Peter asked, do you guys do full appraisals?
It really depends on the loan scenario. So it's a great question. I would say about 75% of our loans, we don't require full appraisals. It's going to depend mostly on loan size and the AVM. We look at the confidence score. There's some other factors as well. If the confidence score is high enough, the right loan size, we don't do the full appraisal, I should say. And we want to get these loans in and out and make it as efficient as possible.
Great, thank you. I think you already touched a little on this, but there's multiple questions about investment property max LTV, and can you do it on a free and clear property?
Yeah, so great questions. Yeah, so max HCLTV on investments 80%. Can we do it on free and clear? We can. I always ask people, like, all right, you're taking a 9% interest rate, and that's fine with us. Let's just call it 9. It's not exactly that. Or they could potentially just do a first at 7. So I just want to make certain that you and your borrower understand what they're getting into and that it makes sense for them.
Great, thank you. The next one, borrower already has a HELOC. Can we pay it off and then they have a new HELOC with us?
Yes, absolutely. We love doing that. If they have a HELOC that's no good, we'll come in and pay that one off. Maybe they want to get a higher draw amount or whatever that is. We're happy to do so. We see a lot of those.
Great. The next one, do we take the primary wage earners middle FICO or lower between the two?
Yeah, another fantastic question. It depends on the loan product we're using. We have some products where we can use the primary wage earners mid score. We have other products where we use the lower of the two. We look at each one of these, and that's what the solutions team is doing, is going, how do I get this borrower into the best product with the lowest rate and the lowest fees? That's what we're looking at. So it could be either or. I will throw out there we do a lot of loans that fall out with our competition for self-employed borrowers or borrowers that own other real estate, because traditionally they may not qualify through overly prescriptive underwriting processes and guides. So we look at that, and again, we could do that bank statement loan without bank statements. Maybe we just look at, okay, you have a lease on that REO property, and we'll take 75 or 80% of that, show us a few months of receipt. We're going to look at that and go, how do we make this loan work? If we don't need those leases, let's say you have REO and the borrower is self-employed and we have enough income off the bank statements, we're not going to ask you for anything that we don't need. We're trying to make this as easy and simple as process for you and for your borrowers.
Great, thank you. Question from Bobby. What type of non-vanilla HELOCs are offered? Example, income is asset depletion.
Yeah, we can do some of that, and we're going to come out with new products as we go along. Like, we're coming out with a P&L only. Asset depletion, it's something we potentially can do. What I'd say is you're not going to be able to deplete the HELOC that you're drawing out to qualify. So most times, people that are going to use asset depletion may not be using a HELOC product. Not saying we won't come out with that. We're going to listen to the market. We're going to listen to our partners in the broker community. And if you say, hey, we really have a need for it, and it makes good credit sense, we'll roll that product out.
Great, thank you. A lot of questions still coming in. There's a few questions in here about draw period. So draw period on primary, secondary investment.
Yeah, we work with a standard 3-year draw. That doesn't mean we can't do a 5-year draw or maybe even longer. Most of our borrowers are okay with that 3-year draw. If you do want a 5-year draw, you just have to call it out to us and say, hey, look, they want a 5-year. It may affect the interest rate / pricing, but we can do a longer draw period than 3 years.
And on those, we can close at an LLC, correct? Yes. 2 to 4 unit.
Yeah, I mean, there's still some ambiguity there. I mean, we do, by the way, this is a great opportunity to call out that we have many different loan products other than our digital HELOC, such as closed-end second DSCRs, which you certainly can close in LLCs for that. We also have non-QM first, that we go up to $10 million in the non-QM product. And we also have, we're very strong with reverse mortgages too. We have no overlays to the FHA guides. Sorry, a little segue there. Might as well get that plug in there too.
Yeah,
I did
great.
see, I
Thank
did see
you.
a question in there, and I know I mentioned it earlier, but, and it's up here on the screen too, but somebody did ask, how do I broker application? If you go to WMD.mortgage, there is a button on there. You hit that button, you don't have to leave your seat, and you get approved within a few minutes.
Great, thank you. Some questions. There's more questions around the lender fees and do the borrowers pay third-party costs such as title, settlement, recording, or is that part of the lender fee?
Yeah, generally speaking, that's part of the lender fee. If there's something that's called out, like let's say, I don't know, if you have a $4 million house and you're getting a 500, they got $2 million first and so on, and $500,000 HELOC, we're likely going to require a full appraisal. In that case, before it happens, we'll let you know, look, this requires a full appraisal. In fact, before we even submit that loan to underwriting, we're going to verify with you what's required on that loan. Hey, this is the interest, this is the interest rate on this loan. It's going to require a full appraisal. If so, most cases it won't. Here are the fees. And does the borrower understand all this? Because we don't want to waste their time or our time either. Like if they don't understand the product they're getting into, there's no sense going through the underwriting process. So generally speaking, those fees will be covered by the third-party services fee.
Great, thank you.
I did see that question about Massachusetts. Yeah, we don't offer currently HELOCs in Mass, but we do offer business purpose loans in Massachusetts, such as closed-end second DSCR and just first lien business purpose, such as DSCR, bank statement, investment properties, etc. And always, and that brings up a great point. Any questions, please, this solutions team, it's an award-winning team, available 365 days a year. These are credit experts. These aren't AEs that have gone from place to place to place. If you have a credit scenario, you need help structuring stuff, we're here to collaborate with you. And we want to take that thing and work together and figure out how to get it into a bankable loan.
Yeah, great. And I'll just touch on that. There's some very specific questions in here. So there's some questions about if we can allow 4 borrowers on a loan, how many HELOCs can a borrower get? Would your recommendation be to send specific scenario questions into that solutions team?
Yes, yeah, definitely. All those type of questions. Yeah, I think we're fine with 4 borrowers. I have to double check that. Generally speaking, we might be able to do up to 10 loans per borrower. We want to be careful from the risk perspective on our side too. Once you start doing multiple loans to one borrower, if something goes, upside down, then you got 5 loans that are in default. So we want to protect you as well and things like that. So we're going to look at it. If a borrower's maxing cash out on every property they own, there might be like, what's going on here? But if it's good credit quality, it's high 700 score, paying everything on time. We're going to work together. We want to do more loans. Let's put it that way. And we can make exceptions from time to time. That's something important to point out. I'll tell you where we're not going to make exceptions. We're not looking for, unique type properties, barn dominiums, things of that nature. We're looking for good credit quality, marketable properties. We're also not really looking for properties that's recently been on the market. I can't tell you how many times somebody says, hey, this property was on the market for $500,000 for a year, but it's worth $700,000. Okay, we're going to use 450. So things like that. We want to make certain that we have a good credit quality loan there. But if you do have those questions, please call into the solutions team or email us. Is there anything else? Oh, can we do investment HELOC in Texas? We currently do not offer that. We do offer a closed-end second investment in Texas. I would have to be, obviously business purpose. So Juan, certainly reach out to us. If a closed-end second's okay, we may be able to help you there. Do you choose title and escrow company? Yes, Angela, we do choose a title and escrow, and here's why. If we're going to close these things within 4 days, we can't do that traditional wholesale model where you've got that AMC, this title, this escrow. We just handle everything quickly, and then that way we know when we do a clear to close, we've already got a scheduler. Anytime 24 hours after you're clear to close, it's sent directly to you and your borrower. You just pick a time, and we'll make it happen 99% of the time. The only time likely that could not happen is if you're in a place where it's hard to get a remote notary, but that really infrequently happens. If we start going to different titles and escrow companies, we can't have that same control and that same deliverable. That's the reason for it. On the other wholesale side, if we're doing a first mortgage non-QM, you can choose your title and escrow. Anything else in here that what's the max CLT, HCLTV for 3 units investment? Generally speaking, we might go up to 75, maybe do a an exception on that, potentially up to 80. We'd have to look at that one. And yep, I think we got everything here. Amanda, are you seeing anything else?
I think we got them all, but if we happen to miss it again, the phone number is here. And the solutions team will answer 7 days a week. They also have this great email address. You can send an email. They will get back to you quickly. So if we did not answer your question, you have some specific scenarios, please call or email us.
Thank you so much. I really look forward to working with all you. I just see, Gregory, can we get the recording of this training? Absolutely, Gregory. We'll get this out to you right away. And when we do have your contact information, and we appreciate working with you, Gregory, as well. All right. Thanks, everybody, and have a great day.